is a person that knows what he's talking about. Join me in welcoming Rob Viglione.
All right, guys. I'm super happy to be here. Hopefully this microphone works well. Okay, so I'm one of the co-founders of ZenCash, hence the logo up there. But I'm here to talk to you about crypto finance and just give you a snapshot of kind of the state of the industry. This is probably a lot of information that you're getting in piecemeal from different talks, but I'm here to kind of bring it together and just give kind of the overview, but then show you where I think it's going and then what we can do to kind of advance that. And I'll definitely have a huge component of privacy in my conversation. This is a big part of what we do in ZenCash, and I think it has to be a really big part of what we do across the industry. Okay, so my background, I'm actually getting my PhD in finance. Crypto finance in particular, working at asset pricing, venture capital, all that kind of stuff. But what's most interesting to me is how we're disrupting traditional finance. So I teach a course on this stuff at the university, and it's a course that I teach to undergrad, like finance scholars. It's like our honors program. And one thing that I tell them is, think about the area of finance that you're interested in, and you might want to go and start a career in. Because these kids, they're really sharp. You know, they're the kind that's going to go to Wall Street to get into investment banking. And I tell them, think about that role and then look at what we're doing in this space and then think if that role is going to exist in 5 years from now. Okay, you may not want to enter that career because there's a lot changing every day. So as part of my goal here is I want to decentralize everything. Yeah, that's great, big lofty goal. But we're starting with my project on ZenCash. So we're privacy coin, we're new. But really, I think one of the coolest things for me of what we're doing is we're trying to decentralize governance. Now, this is something that other projects are doing, like Dash does it pretty well in practice right now. But we're trying to take a little bit more of an academically rigorous approach to how we're going to structure this governance model, this treasury model, as we call it, where we incorporate some fairly sophisticated game theory research. And we try to take the long run perspective here of, okay, well, we know we want to decentralize governance. We want people to be able to make decisions. We need a process for how they can make decisions, but we need to also incentivize them, use some economics to make it sustainable and make sense over time. Another really cool project, actually, we have the executive director for in the audience right now is the Seasteading Institute, where we're actually trying to create, like Roger Ver talked about earlier today, this Free Society project. We're doing that as well, but we're trying to do that offshore. And in fact, the project is fairly mature. Randy's going to be talking about it as well, but it's really incredible. We're looking at our first platform right now, starting construction next year in a lagoon in Tahiti. So it's just beautiful paradise. I think a lot of people who are ideologically love this kind of thing just still don't know about what we're doing, how advanced we are. Like, it sounds like sci-fi, but it's not. The technology's there, and now the willpower is there, the money's there, and people are motivated to make these things happen. So there's a lot of really cool stuff going on, not just in the cryptocurrency world, blockchain world, but also in the real world, with seasteading, the stuff that Roger's doing with free societies. I have some experience working other projects with BitShares, merchant services with BlockPay, headed up the US and Canada operations. ZenCash is where it's at now, and I'm an advisor for ETHLend, trying to do peer-to-peer lending on the Ethereum blockchain. So this is what Charles just mentioned. Price stable currencies are really a big deal, and that's kind of the next evolution. Is we need to make these things much less volatile for end users, or we're not going to see universal adoption. Okay, so that's just my background, who I am. But what I wanted to talk about today was just where we are with crypto finance and what's being disrupted, because it's huge. It is absolutely huge. So we're seeing a revolution occurring across the board. And what I think one of the most gratifying parts of this revolution is we're trying to redefine the concept of money. So you've had other speakers up here. Probably every speaker is going to be talking about how much better money is, Bitcoin is money than fiat currencies, central bank run stuff. But it really comes down to this concept of, do we allow competition? A central bank, by definition, is a monopolist, and I think that monopolists have a really hard time producing better outcomes than fully competitive markets. I think that that's just a tautology, really. I mean, if you have rapid, real-time, flexible innovation that has very little barriers to getting into that market and trying to just create new things and advance the state of the art, that is almost definitely going to be superior to just a group of a dozen people sitting around in DC or Brussels that just kind of says, okay, we're going to set an interest rate tomorrow to be, 0.25%, and we'll print $250 billion this year. That's just, that to me is very clearly an inferior version of money, but that's my perspective. Of course, I'm in the industry, so I have a vested interest. I'm a libertarian, I believe in freedom, so I'm philosophically aligned with what we're doing in the space. Maybe the verdict isn't out yet, who knows? There's probably pros and cons to everything, but I think that if I were a betting man, which I kind of am, I'm going with the cryptocurrency stuff as being superior. So I think we're seeing a revolution going on that maybe the majority of the public doesn't even realize is taking place, and they don't realize how much better of a systems that we're creating for the world. So that's very satisfying. A whole bunch of areas of finance. If you're in the industry, these things might be important to you. Asset settlement in the 21st century, should it really take 3 days to sell a stock and then get your money? 3 days later, that's absurd. That's kind of 19th century technology, at best 20th century. But so this kind of stuff is a no-brainer. We're going to see disruption across the board. But the big players in this market understand it, so they're jumping at it. I don't know how good of a job they're doing, but they're pouring a lot of money into it. So you're going to see NASDAQ, New York Stock Exchange, and these other exchanges. They're going to start using the technology, and that's cool. We're going to see a lot of efficiencies there. But if you're a young student, like I tell my students now, and you want to get into, obviously maybe this is a little obsolete already, but if you want to be a stockbroker, something, maybe that's not the right field to get into, because there are going to be a lot of these middle office positions that are going to be completely disrupted. Venture funding, this is huge. So ICOs, they get a lot of crap. Like a lot of people make fun of ICOs, but they've raised, I think, $2.2 billion so far. And most of that action is taking place this year, 2017. And that's enormous. So we're already outpacing the well-established, very arrogant venture capital market. We're starting to outpace. Whether we're doing that efficiently, we're providing additional value added to young startups. These are things that maybe we're not doing things perfectly right away, but it's the kind of thing where you start working on it, and then you'll learn what you're not doing right, and you can constantly improve. So we're creating free markets for the world here, and we're starting to take a big chunk out of the venture capital industry. And I'll reiterate, so we have some problems. I have a whole slide on some problems in the industry. So I love Bitcoin. I love this industry. But we have to be realistic, and we have to admit that there are problems. And unless we admit what these problems are, we're not intellectually honest enough to be able to solve them. Okay, so admit what the problems are, and then try to figure out the opportunities to either self-regulate or maybe start a venture that can start chipping away at some of the problems. So one thing that I love here is, this analogy that your private keys are like the new bearer bonds. If you guys remember finance history, bearer bonds were, if you had a bond for a railroad company back in the 19th century, you would have this certificate, literally a physical certificate with some coupons that you can cut out, you can mail in your coupon, and you'll get your dividend payment. These were called bearer bonds. So if you owned or you held possession of this piece of paper, you could prove that you possess that bond. Well, private keys are basically the 21st century version of that, which is a beautiful thing, because now we're kind of Uberizing finance. We're bringing money, finance back to the people. Cryptocurrencies, for any of you asset or portfolio managers out there, even if you don't like Bitcoin. So Charles was asking about gold bugs. I know we always have gold bugs in the audience. I love gold myself, silver, precious metals. No matter what you think about Bitcoin or cryptocurrencies, you should have your clients and yourself add them to your portfolio, because the number one thing about portfolio mathematics is you want assets that don't covary with other assets, right? So if you look at portfolio variance, there's a nifty little term on the end of the variance equation which subtracts for assets that don't covary. So if you have an asset that doesn't have a perfect covariance or correlation with another asset, they could both be very risky individually. You combine them into a portfolio, and all of a sudden you have the magic of portfolio mathematics, where you can decrease the total volatility of your broader portfolio. So even if you don't like Bitcoin or this crazy new asset class because you think it's overvalued or in a bubble or whatever, add some of it to your portfolio or your client's portfolio. It just makes a lot of sense, right? Besides having positive expected returns, its contribution to total portfolio variance is going to be a really good thing. Okay, and that shouldn't be an ideological thing. That's just a mathematical concept. So tons of money flowing into the space. This kind of shows you how real it is. Every day the market cap varies. So I was giving a talk in it was in Tahiti, actually, with the Seasetting Institute back in May. And I had, I wrote my slides for that talk, and I said, cryptocurrencies are a $35 billion asset class. And then 2 weeks later, by the time I was giving the presentation, it was already a $60 billion asset class, so I had to redo the slides. Now it's, more than doubled again. So this is a real thing. A lot of commentators like to throw out the bubble word. Who knows? This is still yet TBD, but there's also a ton of money from traditional venture capital flowing into startups in the space. So that's a really cool thing. So you have really smart guys who do this stuff, fund ventures for a living, and they're seeing tremendous value in what we're doing, so they're pumping a ton of capital into the space. This might be one of the hottest industries in the world right now. I'm not sure what the statistical breakdown is of fund flows into different industries. And then this whole ICO craze, or token, crowdfunding. I mean, we'll add another $100 million. So now over $2.2 billion has been raised. So this is real money. We'll see what kind of disruptions that can come from it. So there's a lot going on. So my wife actually helped me with this slide. So I put a little chart here for ICOs, and you see this kind of almost exponential step up in the funding that's going towards them. As you put this cool little graphic here, this is like a pot of gold just kind of spilling over into the world, right? So there's just a ton of money. I guess the slide's not really coming out. You can't see the numbers so much, but we're talking some ventures have raised hundreds of millions of dollars, or over $100 million. And these are for, essentially software products, maybe some networks, cool things, nice white papers, but there's a ton of money going in. So who knows if the money is going towards efficient use or not? Maybe there's a lot of ventures in the space that may not be. Maybe some are going to be truly disruptive, but that's the promise, and that's why people are putting so much money in. We have a lot of skeptics. You guys are probably familiar with some of these fine gentlemen over here. But I chose these pictures because you can see they're very prestigious academic institutions. Like, I'm just a University of South Carolina guy. This guy comes from Princeton, right? We've got a Yale guy over here. We've got a JP Morgan guy over here. They hate Bitcoin. Warren Buffett, right, one of the most prestigious investors in the world, calls it a joke, this whole Bitcoin thing. All right, Paul Krugman, his famous New York Times, basically like a print version of a blog post, his opinion piece about how Bitcoin is evil. His motivation for that is Bitcoin could take away power from central authorities. Well, if that's your definition of evil, I guess we are pretty evil, because that's what we're doing. Robert Shiller, this is the guy who's very famous for just calling bubbles. Well, if you do a rain dance long enough, eventually it's going to rain, right? So you can keep saying that something's in a bubble, it's going to crash. Well, he was saying Bitcoin is in a bubble back in 2014, so anyone listening to him, is very unfortunate. He's again calling Bitcoin a bubble. These guys tend to come out of the woodworks when we see news come out of China that crashes prices 30%. Then they kind of tell the world that they knew this was going to happen all along. Well, hey, guess what? Prices are already back up a few days later. So, Jamie Dimon, I think he did this for publicity personally, calling Bitcoin a fraud and then working with ZenCash. So saying it's a bubble ready to blow up. Who knows? But he got a lot of publicity for it, kind of drove everyone crazy. I actually was just compelled to write my own, blog article a few days ago, where I'm just tired of reading this nonsense in the newspaper, where people, every time that there's a price correction in Bitcoin, or the price goes down a little bit, there's always these people that come out of the woodworks who say, aha, I told you so, this thing is a bubble, it's crashing, it's never going to be successful. Well, I'm tired of people saying that, because Bitcoin is already massively successful. I mean, look at us here. I mean, the fact that we're all here from around the world, the fact that we have these conferences all over the world, you look at it like a Bitcoin meetup in Kiev and you see over 1,000 participants regularly. I mean, this is just, we're already successful. So guys like me who are just happy to have an alternative to the traditional stuff, I don't care if we grow 1 percentage point more in market capitalization. If we get one more user, it doesn't matter to me. We're already a success. Mission accomplished. So. Yeah, thanks. So I'm transitioning a little bit. So that's where the state of the industry is, with just saying, hey, there's a massive amount of money flowing in here. So pay attention. There's some big deal stuff going on. And if you're a traditional finance guy, you should be paying attention too, because of the really interesting characteristics of these assets. Well, I'm going to transition now to the next part of the topic, which is bad policies are costly, and they hurt a lot of people around the world. So this is like the humanitarian hat that I think we should all be putting on, is there are so many people that live in poverty around the world, and there's a lot of reasons that economists point to for poverty, but I'll be bold and I'll state what I think the number one reason for poverty is bad governance. You have some assholes in the world, or some people that limit what all the other people in their, predefined national borders are allowed to do with their lives, what they're allowed to do with their money, the opportunities that they're allowed to have. Well, I think that these bad policies cause some very serious economic and, humanitarian damage. So I actually did a research paper in 2014 on Bitcoin, where it was just shocking to me, from an academic finance perspective, where we talk about very robust asset pricing models as if they're like, rules from God, that tell us how the world's supposed to operate. And we see Bitcoin prices trading in different premiums in different countries around the world. It doesn't make sense, right? Like if you're a trader, you would go and you would buy Bitcoin in the US and sell it in Argentina, right? Book that profit for yourself, right? And then recycle the funds, rinse, repeat, make a killing. It wasn't happening. We saw these persistent price differences around the world. So I started investigating, well, why? So obviously, me being a libertarian, the number one cause that I started looking at was, okay, well, maybe there's something kind of messed up about the governance in these countries that's causing that. And lo and behold, yeah, that's actually true. So I did, in the academic world, if you want to prove something, you can't just find a correlation. I mean, anyone can find a correlation, right? Like stocks are up, sky's blue, and your stocks are up because the sky's blue. Not quite. We have to actually mathematically rule out all the other possible causes for that. So that's what I did. I did some rigorous econometrics, and I showed that. What is this? I used an economic freedom index from the Heritage Foundation. These guys publish an annual index of a variety of different measures of economic freedom for different countries around the world. And I used that in the analysis with the Bitcoin prices. And I showed that for 10% lower economic freedom index, you can expect on average about 7.5% higher premiums for Bitcoin. The point was, I could prove that economic freedom is statistically important for, human welfare or economic results. In this case, Bitcoin premiums. Well, other things that do matter economically, well, real interest rates. It tends to be in countries with poor economic systems or poor financial markets, you have higher real interest rates, but also tax burden. So taxes matter a lot. So if you tax the hell out of your citizens, they tend to want to figure out how not to have that money taken from them. Okay, so it turns out that maybe Bitcoin was one of these vehicles that early on people started to realize, well, we can get money out of the traditional economic system into this other kind of more, internationalized economic system. So there was this statistically significant, effect here for tax burden and, Bitcoin premiums. The other thing was government expenditures. So, like Milton Friedman very, very famously said, the real rate of taxation is really the real rate of spending. So you can partition your taxation schemes any way you want, but really what matters is how much money your government is spending, because they could borrow that money today, they could print money today, whatever, or they could tax you directly, but really it's all a tax. So you have to consider all of it. So you do that, and lo and behold, there's economic significance there as well with Bitcoin premiums. So governments that spend like drunken sailors tend to have higher Bitcoin premiums in their national borders. Okay, so I've got a few snapshots here. This is in 1997. So a lot of us here, especially in the libertarian community, we are very quick to point out a lot of the flaws in a variety of governments and the horrible things they're doing to their people. And we kind of think, if you're caught in this bubble, sometimes it's like negative reinforcement, right? And you think it looks like the world is getting worse. Well, maybe it's getting worse from your vantage point. But it turns out in 1997, look at this. So we're talking economic freedom around the world. And look at all these red. Red is bad. Hey, remember that red is bad, green is good. Yellow is kind of okay, not too horrible. The world's kind of sucked from an economic freedom perspective. Well, let's go forward 10 years. Or is that 10 years or 20 years? 97, yeah. So 20 years. And the world's looking a little bit better. So in the U.S., unfortunately, I think we're coming, I guess we're staying the same there. But Canada's getting better. That's good. Right, but other big parts of the world are getting better. So a little bit less red here and parts that are extremely impoverished. That's a really good thing. So there's a great book out there I highly recommend everyone read called The Rational Optimist. So there's a lot of reasons to be optimistic. The fact that we're here today and we're talking about this really transformative industry is one obvious reason for why we should be optimistic. Well, the world, from a statistical perspective, is actually getting better. there's obviously still some horrible things we need to keep improving. Now, one point that I like to harp on everyone. So I'm actually working on potentially another citizenship. Like a lot of people in the audience probably think about this whole perpetual traveler concept of like diversifying your political jurisdictions. People ask me, why do you even want to do something like that? America is such a stable place, which it is. Compared to a lot of places in the world, it's a very stable, prosperous, relatively free society, and that's awesome. But there's no way that we can predict where we will be 10, 20, 30, 50 years from now. So I think everyone rationally should be thinking more like international citizens and kind of move away from this nationalism. Like, I love my country, I love my family, my friends, and all that kind of stuff, but that's no reason for you to limit your family's options in the future and think that you could be living in a very stable society now that is not stable in the future. And policies can change very quickly within your own lifetime. And with just the change of administration, policies can change very rapidly. I mean, things that we're probably all very aware of in this audience, like in 1933, FDR criminalizing what he called the hoarding of gold. I mean, we think that might be kind of silly, but it's dangerous. So these things, there's a historical precedent, especially in our industry, things look amazing right now. I mean, who knows where they'll be? Charles mentioned it as well. Like, probably one of the biggest threats to us is regulation. So we have to keep this stuff in the back of our mind that we could be, there could be a clampdown on the industry at any point. Okay, look at Venezuelans right now. The Bolivarian revolution didn't work out too well for them. Some apologists say that that's because they still have too much capitalism, or the capitalists fled and that's why they're impoverished. Well, I think that's BS. I mean, if you're going to have an authoritarian kind of redistributed by force society, I think that historical precedent here is that you're probably going to be reverting back to poverty if you haven't already gotten out of that. So places like Argentina have had 6 economic crises in just the 20th century. I mean, that's horrible. Think about your own lives. In America, we're pretty big on planning for your future and, building out your retirement portfolio, saving money every paycheck in your 401k or your IRA. Well, you can't do that if you're in a country like Argentina and your currency is going to blow up every 10 to 20 years, right? So your long horizon planning perspective is shot. But what we can bring to the world now with this technology is we can bring this international standard where we can start correcting some of these issues. Kind of like solve for these, political idiosyncrasies in particular countries and try to give people a different option or a different alternative. So, and policies vary significantly across countries, even in our industry. I mean, Bitcoin is perfectly legal and encouraged in some countries and illegal in other countries. I mean, Afghanistan, I was there. It's a beautiful country, but probably not a place that you want to raise a family. Bangladesh, Bolivia, Ecuador, Macedonia. These are all countries, at least at the time I wrote these slides, where Bitcoin was outright illegal. And obviously even wider heterogeneity or differences in economic freedom around the world. So there's a lot to consider. Here's just it's an old chart, 2013, but I thought it's still very relevant. Where you just look at this political risk is very persistent in many countries. Like, how do you as a normal person in Sudan try to plan for your family's horizon? I mean, do you join the corrupt government and maybe try participate in the exploitation of the rest of the population? That sucks. So now we're starting to give people better alternatives to participate in honest economies. And this is a chart that I love because, so the way to read this chart is you've got type of government. You've got like highly institutionalized democratic societies, and you've got totally authoritarian governments on the left-hand side of this score. And then you've got kind of this political instability risk. So percentage risk of certain type of political instability. And no matter what country you live in, that risk of instability is always greater than zero. Okay? I don't care how stable you think your society is or how stable you think your government is, the risk is always greater than zero. Like Germany in, I guess before World War I looked like a very stable society. Even in between the war years, I mean, they were kind of going through some economic problems, but still looked like a fairly stable society overall. And then look what happens in the 1930s. Right? You can have a very industrialized, very like culturally advanced society, scientifically advanced society that just reverts to barbarism. Okay? So there's always this probability, and the probability is non-trivial in the middle. But it's something we should always consider. And what we're doing here with Bitcoin and cryptocurrencies is we're offering people the ability to make sure that your life's work does not evaporate if one of these horrible events happens in your country. Come on, move. Okay, and here's a snapshot of, a lot of people in the industry here talk about Venezuela because it's just humanitarian crisis and chaos going on. over there. And what our government tells us, they try to scare us all the time. There's always these terrorism threats. So, they issue this threat advisory, the system, and you'll note they never mark it down here. We're always at this elevated to severe risk of a terrorist threat. So we're kind of always scared to justify or to accept things like we have how many Americans sitting in cages right now, how unacceptable. Just relative to other countries, this is absurd. I don't think Americans are, by definition, more criminal than people from other countries, right? Or we justify this, militarizing our police force, right? So, we can complain all day long. We could hope for these big, grandiose solutions. Or what I like to do, or what I like to talk about is, let's just go out there today and try to fix things, even if it's our own little marginal contribution. So what we're doing at ZenCash is we're trying to do our own little marginal contributions to the ecosystem. It's an awesome ecosystem the way it is right now, but we're trying to innovate in a few areas. So we're piggybacking on the privacy primitives from ZCash using these zero-knowledge proofs. But that was just the start. We've already built out an end-to-end encrypted network. So now, one big thing with correlation analysis for cryptocurrencies, identifying owners of cryptocurrencies, is kind of these fiat exit entry points, or monitoring, ISPs or different network statistics that transactions are sent over. Well, we figured the first step is let's add a TLS layer into the network. So now we can actually do node-to-node fully encrypted transactions, which is great. We do snarks over a fully end-to-end encrypted network. But we're also trying to do other stuff. Obviously, with this stuff, there's no-brainer applications like comm systems. We have some messaging systems in beta, document publishing on IPFS, so on. We're kind of experimenting with some of the economic rewards, where not just miners are being paid, but where you have a community fund where we're paying developers, marketers, and different people to help out, and we're paying people to host these secure nodes. So we don't expect people to be working with us out of benevolence. I mean, a lot of people are ideologically motivated and they want to see a freer world, but we also want to pay people. You do valuable work, you set up a full node, you're helping secure transactions, well, we want to pay you for it. So we actually have a payment scheme for that. But I think one of the coolest things is these cryptocurrencies across the board talk about decentralization. And so Balaji from 21Co wrote an awesome article a couple months ago on actually measuring decentralization in blockchain system or cryptocurrencies, and most aren't actually decentralized, right? If you've got a handful of miners, you've got a handful of important developers who make decisions, or if you have clustered nodes on your network, they kind of cluster over certain ISPs, you're really not that decentralized. So we're taking decentralization seriously, not just paying for people to set up nodes, which pushes the node network out, but we're also trying to create this DAO system, which is, I'm an academic, so I'm trying to create this with game theory in mind and real science behind our DAO, but we're trying to incentivize people to participate in the voting system and to have a say in how things are run. So anyway, I see I'm out of time here, but I wanted to end with the big statement. I guess the big statement is we're doing so many cool things in the industry. And there's some great projects out there that are taking this humanitarian angle, like Humanique. I think what they're doing is amazing, kind of biometric enrollment for people that are unbanked. Very cool. This is something we need to do. But they're doing it intentionally over a fully unsecured network because they want, or a fully transparent network, I should say, where they want visibility into the people that they enroll, mainly for the perspective of they don't want governments to shut them down or exclude them. I think that what we need to be doing is building strong privacy as a primitive for every project, and then build the cool stuff on top of that. So that's what we're trying to do. That's all I have. Yeah. Cool.
Thank you, sir, for what you're doing.